Hello and welcome to this presentation of how to know when the market is giving you a warning signal. This is the Specialist Trading Weekly Stock, E-mini, and Forex lesson. Hello everyone and welcome once again. My name is Primo. I am the president and founder of Specialist Trading. And in today's webinar, I want to go over some specific warning signs that the market can give you using two of our best tools at Specialist Trading. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you some performance results using these two tools, but please remember that we can in no way guarantee that any of these results will be repeated in the future. So please take a moment to view our disclaimer, and then we shall begin this week's stock, E-mini, and Forex lesson. Okay, as I stated, today's presentation is about spotting warning signals with the market. And when we say warning, we're not talking about the market is going to go into some big crash or it's going to roll out of bed and just go straight down. We're just talking about we may be in some type of indecision period with the market, and it may give you warning so you can act accordingly. Just the way someone, a weather broadcaster, may give you a warning about an impending storm and some type of thunderstorms. He's not saying to move out and evacuate, to leave your home or to go into some type of a storm shelter. He's just saying to become prepared because something may happen that may come out of the blue. So it's best to be prepared for these different type of environments. It's the same way with the market. If we look here at the S&P index, this is starting from beginning of March all the way till the end of June, or I should say the end of May coming into June, we see that we were going straight up and things were going very nicely in the market. If you were long or if you were just following this trend, you were doing very well until all of a sudden at the beginning of June we went into this downward kind of choppy phase where we're not really sure whether we're going to pull back and go back higher or whether we're just making another type of bounce before we head lower. So how could we have gotten a couple of different type of warning signals because of the trend was looking as if we may have been changing and going to the downside? Well, at Specialist Trading, we have two distinct ways of determining if the market is giving us some type of warning signal. These are the two main tools we use. The first one is our reliable buy-sell line. Now, this gives us a broader overview of the market. It's not meant to be some type of a timing tool, but it's more of a broader overview of the market, giving us a collective idea as to what the market may be doing, or even an indice or a Forex currency pair if we're looking at those things. And then our other tool, which is more short-term based, is the PET-D. This is the Primo Early Trend Detector. This is another great tool. It's more for short-term type of decision making. And even though it's not a signal, it is not a type of trading strategy. What it is a early trend detector, which helps us to discern what the market wants to do on a shorter time basis. All right, so let's look at the buy-sell line. Once again, looking at an overview of the market. And if we look at the same chart, the S&P index starting at March going all the way to July, we see that we were headed nicely up in this nice uptrend until we've gotten into this last couple of months in this nice downward choppy move. Are we going to roll over and go even lower, or are we going to go back and test the old highs? Well, our basic way to find that out, giving us this overview, is by using the 50-period simple moving average. That's our buy-sell line. And what the 50-period moving average does is it tells us what side of the market to be on. If price is above, consistently above the 50-period, well then we only look to go long or to stay long. If price is consistently below the 50-period, well then we look to go short. Well, as we see here, for this remainder of this time, actually starting since the beginning of the year, we have been easily above the 50-period simple moving average until roughly about a couple of weeks ago in June, when the market closed on this broad sell-off here below the 50-period simple moving average, and we had consecutive closes. All right, so this was giving us a warning signal. Once again, just the way a forecaster may give us a warning signal about an impending storm. He's not telling you to evacuate, not saying that that's it, to go short or to get out of everything because we're going to crash. Just telling us to give us a heads up to prepare for possibly some type of a downtrend in the market. Now, as you can see, even though we had 3 or 4 consecutive closes below the buy-sell line, well, guess what? We never really went much lower, and we rallied all the way back up into this first week of July here, and even today we had a close above. So this is not telling us now that everything's clear, that we're going straight back up and making new highs. But what it is telling us is if we get a few more closes above the 50-period simple moving average, well, it's almost a reverse warning sign telling us that everything's okay, that we should start to look for buy signals once again. So as you can see on a broader aspect, a way of looking at the market, we're in this indecision phase in the market. We may be rolling over and come back below the buy-sell line, or we may have a couple of closes back above, which tells us that we're starting to look for some type of longer-term uptrend once again. But what if we want to look at a shorter-term time frame? What if we don't want to wait and say, well, Steve, I need to know right now. I can't wait for these type of things in the next week or so. Well, as we can see here, we had consecutive closes below, but you want to actually see what's going on a little quicker. Well, we use the PET-D, the early trend detector tool. Okay, this is a great tool mainly for shorter term outlooks on the market. Where the buy sell line was looking for longer term, we're looking for shorter term. Now how it works is if you get a series of green bars in this color bar tool, well then most likely you're in some type of an uptrend. If conversely you get a series of red bars, well most likely you're in some type of a downtrend. That's how simple it is, but it's a very powerful short-term tool. All right, so let's look at once again the S&P 500 from March all the way till the beginning of June. As you can see, if we applied the PET-D, we had a confluence of green bars this entire time up. And so what we're looking for is the majority of bars either red or green to give us some type of clue. Now right here we had 3 red bars, which was giving us a clue, another warning sign as to, well, perhaps we're going to break this support and come much lower. But it was quickly replaced by a rally to the upside, and then we went back into the green mode. So it had given us this warning far before this rally started. And we had a couple of reds followed by a green, couple of reds. But then right here, guess what happened? As the market started to unfold and started to go lower, we had a confluence of red bars, a total roughly of 5 altogether. So we're looking for anywhere from 3 to 5 bars in a particular color sequence to tell us which direction the market was going. So this gave us a really quick early warning as to what may happen. Now if we follow through the next week, nothing really happened. So as you can see, we kind of bounced back up, kind of similar to what we're doing right now. We bounced back up after we had that warning signal, but we never really had a confluence of green bars. We still had this scattered of green and a scatter of red, followed by this warning sign right here. And then look what happened coming into the first week of July. All right, we had a rather sharp sell-off. So this was a really nice warning here. And we went back to this downward mode where we have a confluence of red bars. Okay, so still looking at this, the market is still telling us, give us warnings that we're most likely going to be headed lower. So this was coming into the first week of July. Now, as we see here, what has happened this past week, well, guess what? We've rallied back up. And so even though we've rallied, one would still say up to this point, well, we're still giving warning signs to the downside. But guess what has happened here in this past week? We've had 4 consecutive closes in green mode using the PET-D. So now, just like the buy-sell line, we are getting signals that possibly, not confirmed, but possibly things may be okay and we may be headed back up. I'd like to see one more bar with a green color to it, giving us more of a confirmation. Anywhere from 3 to 5 bars is what we need, but because we're in this indecision mode, I'd like to see one more bar at least, possibly 2 or 3, to give us more of a confirmation. And then possibly, once again, we wait for the market to tell us what to do. We don't decide on our own, but the market may be possibly telling us if we get one more green bar that we're going higher, possibly to test these old highs. Now, this does not just work if we're looking at the S&P index. We want to use the Forex markets. We look at the Australian dollar. Looking at this chart here from April to May, we see the Australian dollar was kind of just going sideways. And if you just listen to the news or belong to some chat room, you would say, well, there's really nothing happening in the Australian dollar. We're just in this kind of a range. There's no clues as to what the market is going to be doing. Well, that's not true. If we apply these 2 tools, which we talked about, the buy-sell line and the PET-D, we see here that we had a confluence of green bars telling us that everything was fine until this point right here. We not only had consecutive closes below the 50-period simple moving average, but we also had entire red bars here. So this was giving us a great clue that most likely, until things change, we are going lower. And this was at the beginning of May, roughly a couple of months ago, and then guess what has happened? This is a live chart all the way up until the beginning of July, what the Australian dollar has been doing. Once again, this also works in the E-mini market. If you're an intraday trader, you can still apply these two proprietary tools that we use. We're looking a couple of weeks ago at a 10-minute chart in the EMini Futures. Once again, coming into this day, one would have said, well, nothing really is happening. In fact, this was the day that the Fed made some major news announcement about how they were going to use the rates. And a lot of people don't like to do anything on days like this. They want to sit back and let the market unfold and let the news come out before they make a decision. Well, that's fine. And as we see here, looking at this day on a 10-minute chart, there's really no decision process being made. Even when the news came out roughly around this time here, we still were in this kind of rangy mode thinking, well, what's going to happen? But if we applied the two tools we talked about, the BuySell Line and the PET-D, we see here that coming in we had a large number of red bars giving us some type of warning, but we were still above the BuySell Line. It wasn't until we got to roughly this point, after the news came out, that we were had consecutive closes below the buy-sell line, plus we had 5 red bars. So this was a great clue telling you that if you're long, you better get out. There's probably not going to be a rally. And if you're an aggressive short trader, you might want to get short using some type of strategy. So this was roughly midday on the 19th of June. Once again, there's no reason why you should have gotten hurt if you know how to use these two tools, our proprietary tools, because look what happened at the end of that day and going into the next. That's where the sell-off occurred. But we had early warning from our PET-D tool as well as the buy-sell line. So these are great indicators, are great tools that you can apply in any market, in any direction, and in any time frame. All right, so action to take. Looking at the broader market, looking at the S&P 500, what should we do knowing where the market is with these two tools we talked about? Well, if you're a conservative trader, if you're an investor to a conservative trader, you like to hold positions for the long term and you don't want to take a lot of risk, do not add to current long positions. Even though it looks like things may be firming up, we still don't know. I'd like to get a little bit more confirmation with price closing above the buy-sell line on a daily time frame, as well as maybe 1 or 2 more green bars using the PET-D. So do not add to any long positions you may have. It's okay to stay long, but you may want to tighten your stops. In other words, if things do turn around and we start to go lower, at least you'll lock in some of your gains by tightening up your stop. Also, you may want to exit a portion of your position just to be safe. If you're carrying a large position, you may want to exit a portion of it just to make sure that you're okay. You can always add to it later on. Let's say you're an aggressive trader. Let's say you like to get in and out. Let's say you like to really trade the market short term. Well, applying the two tools that we talked about today, what you can do is exit all long positions. If you are long, even though the market is firmed back up again, you may want to get out at these levels because you may feel that we still don't have confirmation that we're going higher, and you may want to look for shorting opportunities. You notice here I say look. I didn't say short at the market. There is no sign to go short right now, but you may want to look, start to look and be open to different stocks or different type of issues that may be looking as if they're going lower. All right, so those are the two different ways to take actions using these two different tools. Okay, so this brings us to the end of our weekly stock, E-mini, and Forex lesson. Today we talked about how to spot warning signals in the market. Just the way a weather forecaster may give you a warning of an impending storm, it doesn't mean you have to evacuate. It doesn't mean you have to go into some type of storm shelter. It just means to become prepared for what may be happening. And that's what we're doing right now with the markets. We're becoming prepared for what may be happening in the markets. As always, we ask our students and members to learn the strategies, learn how to paper trade them first before you actually go on using all the tools and information we give you. Our edge here is consistency. We're maybe hitting home runs from time to time, but what we're looking for is this nice consistency in our P&L where we're looking to hit singles instead of those home runs. This will, in our opinion, make sure that you're sticking around to trade not just a couple of months or a couple of weeks, but more like a couple of decades while you're trading within the markets. In conclusion, I asked you to take one last look at our disclaimer. I showed you a lot of performance results, showed you how to use these two tools, the buy-sell line as well as the PET-D. But please remember that we can in no way guarantee that any of these results will be repeated in the future. Thank you so much for attending this presentation. Look forward to seeing you next week. Bye-bye.